Hello, this is PDG ma'am, and this will be an accountancy based video for class 12 Cbse. I will be concentrating on accounting ratios in this particular video, and this will come in different parts because it will not be possible to cover everything about accounting ratios in just one video, and I wouldn't want it to make very long also, so it will come in different parts dealing with the different ratios that you have. So before I begin with the accounting ratios, which I will try to keep it as simple as possible, and I will try to give you only that much amount of information which will be required in class 12, not going into much depth of it because I don't want to confuse you. I just want you to get prepared for your board's exam, and so that you don't lose out your marks when it comes to the ratios. Before I start doing that, let me just tell you about the syllabus very briefly, not in details, because in details I will take up the syllabus breakup in another video of mine, because I still find some of the students being a little confused regarding the syllabus. So this is in brief, I'm just telling you. You know that your accountancy syllabus is divided in two parts, which is the part A and the part B. Part A has partnership and company accounts and carries 60 marks, where 36 marks goes for your partnership and 24 marks is left for your company accounts, which has shares and debentures. And the part B, which is the financial analysis statement part, that will again have two parts. Okay, one is the cash flow statement, and another one is the analysis of financial statements. These two together carries 20 marks, out of which your cash flow statement has 8 marks. So you're left with 12 marks, which is for this analysis of financial statement, which has accounting ratios. So we are in this particular video concentrating on part B of the accountancy syllabus, which deals with the analysis of financial statements and which carries 12 marks. Okay, so let's begin with accounting ratios. So first is, what is a ratio? Now that we all know, you all know it, I don't need to go into details about that. It's a relationship between two things in terms of either it could be the quantity, it could be size, it could be amount. Okay, so basically the relationship between two things. Now how is this ratio different from that of accounting ratio? Not much. If in order to come to a ratio we are using accounting information, then that becomes an accounting ratio. Okay, the information that we are using is accounting information, and then we are coming to a ratio, then we are finding out a ratio, then that becomes our accounting ratio. Now the next thing can be that why do we need ratios? Because we are spending a lot of time in computing the ratios. So is it just a total waste of time? No, absolutely not. If it would have been just a waste of time, then we wouldn't have done it. Ratios are very, very important. Why important? Because these are very useful indicators. It will indicate about different things about a business. It could be the solvency part, it could be the liquidity part, it could be the profitability part. Now you might get a little confused with these terms because these are very technical terms, okay? Profitability, solvency, liquidity. तो हम लोग इसे सिंपल बना देते हैं. ये तो कुछ टर्म्स है जो कि हम लोगों को याद रखना है, समझना भी है. ऐसा नहीं है कि सिर्फ याद रखेंगे, हम लोगों को ये टर्म्स समझना भी है. एंड आई एम श्योर सम ऑफ यू अंडरस्टैंड इट वेरी वेल एंड अदर्स विल अंडरस्टैंड इट by the time you're ready for your exams. But if we have to keep it very simple, then what we can say is कि एक बिजनेस कैसा चल रहा है, बिजनेस का कैसा पोजीशन है. क्योंकि बिजनेस को हम लोग किसके बेसिस पे जज करते हैं? काफ़ी सारी चीज़. प्रॉफिट क्या हो रहा है, प्रॉफिटेबिलिटी, ठीक है. फिर वो बिजनेस हाउ फास्ट विल इट बी एबल टू मीट इट्स लायबिलिटीज़. कुछ लायबिलिटीज़ तो रहते ही है ना, तो लायबिलिटीज़ को हम लोग कितने जल्दी मीटअप कर पाएंगे. और वो अगर करंट लायबिलिटीज़ है जो कि हमें साल भर के अंदर मीटअप करना है, तो वो हो गया करंट लायबिलिटीज़ पोर्शन. तो वो लायबिलिटीज़ हम लोग कितने जल्दी मीटअप कर पाएंगे, उसके बेसिस पे हम लोग लिक्विडिटी डिसाइड कर लेते हैं. तो दीज आर इंडिकेटर्स. द बेटर योर पोजीशन इज़, द बेटर इज़ द पोजीशन ऑफ द बिजनेस और द ऑर्गेनाइजेशन और वट एवर. लाइक फॉर एग्ज़ाम्पल, समझो कि मुझे अगर क्रेडिटर्स को पैसा देना है, तो उसके लिए तो मेरे पास cash होना ज़रूरी है. So either that will be cash in hand or cash at bank. So एक तरफ है current assets, दूसरी तरफ है current liabilities. तो इन दोनों के हिसाब में we will be calculating our maybe a current ratio, and we will decide whether we are in a good position to pay off our liabilities or we are not in a very safe position. So this is just a simple example that I'm giving you all. Obviously, when we talk about a business, there will be bigger things and more difficult things. But for your syllabus, right now, you don't need to go into much details. Rather, now since your exams are almost knocking at the door, you should concentrate on what to study so that you don't lose out marks. And this video will try to do that. Now let's get into the ratio. Let's start with current ratio, which is very easy actually. Now what is current ratio? Current ratio, the formula that we will use is current assets divided by current liabilities. Okay, now current assets, you know, you can have trade receivables. Trade receivables means you will have datas, you will have bills receivable. Okay, but when we talk about datas, we will deduct the provision for bad debts part. That we will deduct. So you have your datas, you have your bills receivable, you have cash in hand, you have cash at bank, then you will have inventories. Okay, but when we are talking about inventories, do remember that for your ratio purpose, we will not be taking the loose tools and stores and spare. Those parts we are not taking when we are calculating the current ratio. Other than that, you can have prepaid expenses, you can have accrued income, you can have advance tax and things like that. So the list of current assets, if you need, you write in the comment box. I will be mentioning it in the description if you need a list of the common current assets. But when we are doing this, then do remember inventories excluding loose tools, stores and spares. Trade receivables equals to bills receivables plus sundry debtors minus provision for doubtful debts. When you're taking cash and cash equivalents, there we will take cash in hand, cash at bank, checks, drafts in hand, etc. Okay. One more thing, please do remember, trade investments not to be included in current asset. Okay. And when we talk about the liabilities part, okay, there do remember that loan on mortgage, bank loan, not to be included in current liabilities. And if we talk about the ideal ratio, this is important because you will be having analytical questions also. So you will have to, comment. Once you find out a ratio, you will have to comment on whether the position is good or not, whether the ratio is okay or not. So ideal ratio is something that we consider as good, as the standard. Okay, to be let's put it in a way that it's the standard ratio. So when we talk about current ratio, there ideal ratio is taken as 2:1. That is, your current assets should be ideally double that of your current liabilities. In that case, your liquidity position is good. For every current liability, you have double the amount of your current assets. So if there is a time where you have to pay off your current liabilities, you can very well pay that off. Okay? But if your current assets keeps on decreasing and your current liability increases, then that indicates a not so safe position. Okay, so this is the ideal one. Greater than this is safer, better. But anything less than this, that is your assets are reducing, then we will say it's not a good thing for the business. Okay, now let's solve one sum. This is a very simple sum. Most of you will be able to do it without any assistance. But for the ones who haven't yet understood the concept of ratios and are really not being able to cope up in the class, for them I am specifically doing this. In this sum, what you see that certain assets and liabilities have been given to you, and the question is that you will have to calculate your current ratio. I will show stepwise so that I can also tell you about where students make a mistake and where there is a chance of losing out your marks. Okay, it's very easy to get marks and equally easy to lose out marks for being not very careful. If you're careless, you unnecessarily lose out marks. Okay, so I'll tell you what you're not supposed to do and what you are supposed to do when you are starting with your numericals on ratio. The first thing that you must do is write the formula. Formula carries marks. Okay, so even if you're not doing the sum, you're not being able to solve it, but you at least know the formula, then state the formula because formula carries marks. So we have to calculate current ratio. So we will write current ratio equals to current assets by current liabilities. Next, we will mention what are the current assets given. Do not directly write the figures. You have to mention what those figures stands for. So you have to mention what are the current assets that you're taking. So first is cash plus or cash and cash equivalents. Then you have trade receivables. You have inventories. Trade payables is liability. Short-term borrowing is also liability. Current liability, other current liabilities obviously falling under liabilities. And they have mentioned something like other current assets. Now you put the amounts. Cash and cash equivalents is given as 16,000. Trade receivables given as 1,54,000. Inventories given as 1,20,000. Other current assets given as 50,000. This if we calculate. Unfortunately, calculators are still not allowed, so you will have to do it yourself and you will be getting 3,40,000 as your current assets. Now we will calculate the current liabilities. Equals to trade payables. Same way, we will show everything and then we will put the figures. Trade payables plus short-term borrowing given as bank OD. So you can directly write bank OD or you can write short-term borrowing the entire thing. That is up to you. Other current liabilities. this we are getting as 10,000. Trade payables was how much? Trade payable is 1,50,000. Okay, so first is trade payables. Then we have the bank OD, which is 10,000. And then we have other current liabilities, which is also 10,000. So we are getting it as 1,70,000. Now we have both the current assets and the current liabilities. Now we will use it in the formula. So we will now write current ratio. Write the formula once again. This time you can write CA by CL, no problem, since you have already mentioned it once, the full form. But don't write CA and CL in the initial part, okay? And you put it 3,40,000 divided by 1,70,000. You get it as 2 by 1, which is 2:1. So we have got this. Now we already know that the ideal ratio is also 2:1. So this is considered to be acceptable. So if we had to comment on the position of this particular business, we would say that it has the ideal ratio. So it is in a safe position if we are talking about the liquidity. But in this sum, they have not asked you to analyze. They have not asked you to comment. So we are not doing it. But otherwise, we would have done that. Okay, so this is one simplest example of current ratio. In my next video, I will be taking up a different kind of ratios. I will be doing a few more sums on current ratio, and then I will be moving to the liquid ratio. So this was a very simple sum on current ratio. Hopefully it has helped you. In case you found this sum to be easy and you could do it, you could understand the way I had explained, I would appreciate if you like, subscribe to the video, and if you comment. Your comments do help me understand what are your queries.